Baby.
Hey everybody, we're here. Can you hear me? Hey, 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 hey. I'm here, guys. I think you can hear me. I love you. You know I love you. Talk to me about if you can hear me or not in the chat, and we'll get going. Welcome everyone. Welcome to the show. Yes, Iman, this is Patreon only, which is incredible. And mic is low. We can hear you a bit too low. Thanks. We're going to work on that right now. I love you guys. Maybe you can hear me now. Great, guys. Sorry about that, guys. Listen, we just keep commenting on sound, guys. We're working on it. Thanks, Flowdeck. We just did a reaction video. Look at me. I'm flustered because you heard it here first that Paul just watched a Tesla video from Meet Kevin, and I thought it was going to go over quite well.
You don't think it went well?
Did you really think it was going to go well?
Wait a second. Did it not go well?
No. I think he means from the perspective of like you kind of liked him and it would have been okay in that regard, right, Seth?
Yes.
Yeah, I was thinking.
So when I went to go pick up food, did you go like, oh my God, what the hell is that?
Kind of, Paul.
I mean, Seth, to be fair, like what you say about, I've never watched Meet Kevin before. So that was my first time seeing him. And from what people say about him, I was like, oh, okay, he can't be that bad. He can't be that off base. Then we start going into like owning 47% of his portfolio is Tesla.
I don't care about that.
I don't either, but I thought that he was a little bit more not like that. If that makes sense.
What do you mean?
Yeah, I thought he was a little more.
I didn't think that he was one of these like cheerleaders of all these hype stocks. The way that people talk about. I mean, I've never watched the guy. I'm assuming that he just kind of reminds me of Stock Mo.
Yeah, I was thinking he was going to be a bit more grounded, maybe a bit more. I just couldn't imagine someone being that big and then showing math that was completely preposterous.
Yeah, exactly.
My microphone's off for a second.
Go ahead, talk again, Paul.
My microphone is off. Do you hear me?
I do. I think they hear you.
No, they're saying mic's off.
Tim Jones,
guys
hit the like, guys. Hit the like. Paul's fine.
Paul's fine.
All right, cool. Me, Kevin is running for governor. That's what we heard.
We didn't even bring that up.
Yeah, I didn't even know that. I didn't even know that until right before we did the live stream. Yeah. The reaction video, all of a sudden was like, yeah, he's running for governor. I'm like, what the F?
Yeah, this is it's really something. We live in some weird times. That's all I gotta say.
All right, so this is our first midday Patreon only live stream.
Top tier only.
Top tier only live stream. So the goal behind this, guys, is, as I've said before, we're really trying to focus this channel as it grows on the patrons, right? We're trying to figure out how do we make this more valuable for you guys, because you guys are the ones that are going to drive this channel. At first, we had 100 or 200 patrons. Now we have 2,200 patrons. So it's much more. Go ahead and walk by, Tim. It's much more important that we focus the channel on you guys, make more content for you, and keep building it that way. So, it's going to be a lot. It's going to be the Thursdays because we were doing the live streams 2 days a week, which was fine. But I want a more focused Patreon for you guys, a more live stream. So people have made requests. A couple of requests that were made were, can we go look at, what do you look at after a company? So what I want to do is pick a company, start looking at the 8 pillars. Then from there, ask the questions we need to ask. And then as a group, go research those questions. Those will incur more questions, etc. I don't want to spend an hour on that because I think this live stream should be at most an hour. But I think to myself, that's a good example. 2 is retirement. People kept asking me about retirement. I got emails, got a couple messages from people about retirement. We can talk about that. Mo, what other things did you see people want to talk about?
A big thing, a lot of people wanted us to walk them through a deep dive of what we look for in a 10K. I think that's an important thing. We've talked about it for a long time. It's a good opportunity to show our top paying people how we look at something. And
so what kind of company we want to look up?
I mean, I think we should why don't we look at something like we own and go, or we go back. Okay, why don't we run a screener and find one and go through it?
Let's pick a company that, what about Peloton?
I was actually thinking we do Peloton. And because I want to see why. So they're diluting their shares. Their shares outstanding is increasing. I want to see why.
Here's the problem with the deep dive.
I just want to see why.
Okay, here's the thing about the deep dive. I want you guys to remember. we typically read the 10K pretty thoroughly. We can't do that in this time period. That alone takes over an hour.
Yeah, I think maybe we should highlight, like, we go through the business factors, we start looking through the main risk factors. Obviously, we go down to the financials, and if there's something in the financial statement that throws us off, we want to go and see what that major jump or decline was.
Okay, so let's do this. Let's pick Peloton. And the reason we're going to pick Peloton is they just dropped in half since January or February. They just had this big scandal come out. They were down a lot the last few days. I think they're up minorly today. But the reason I want to look at Peloton is it's a fast-growing company that I want to sit there and I wouldn't buy them at this level. And we have a video coming out this weekend about Peloton.
Yep,
so
that's true. Yep.
So keep that in mind when you're doing this. But let's first do the Peloton PTON. So this is our software, guys, as you all know. There's a little bit of a, I just reported a bug on Peloton. If you see right here, it talks about no profit margin. Well, there is a profit margin because they have a profit. The second you have a profit, you have a profit margin. So I don't know why that is, but either way. So right now, if you look right here, guys, at the chart of Peloton, I mean, look at this, guys. This is literally January. I think the intraday high was 171. And it's currently at $88 or $84 or something like that. I mean, it's fallen in half. So you look at that saying, a lot of people, and I think it's different for you patrons. You patrons have bought in. You realize companies are overpriced. They can fall. This is a very dramatic fall from the peak of 171. Does that mean it'll never get back up there again? Absolutely not. But from a standpoint of the 8 pillars, we got a market cap of 24 billion. We have a PE of 145. The margin is net income of 166 on $3 billion, which is roughly 5%. Okay, so their profit margin isn't the best, but guys, their gross margin is 44%, and they're spending a lot of money to grow. So of course their profit margin won't be high. You have to factor that in when you're looking at it. Don't punish them and say, oh my God, they only have a 5%. They're only gonna have a 5% profit margin as they grow. Even Mr. Conservative Paul realizes that and isn't going to kill them for it. I love Pelotons, I love the machines, I love the community, I love their revenue stream. One of the things we're gonna look at in the 10K is what's the split of revenue between monthly recurring fees and machinery? Because we wanted to understand that, what's growing, because the monthly recurring revenue, guys, huge margins. If their overall gross margin's 44%, that includes hardware, machinery, you better believe the gross margin of that software is 80, 90% or something crazy like that. All right, so they're expensive. 8 times sales for a company like this seems a little rich, but let's go on.
A couple questions there, Paul,
Yeah.
real quick. Number one is, we did a whole video on this. Do you want to redo it? Because other people are saying, can we look at an 8-pillar stock that we might actually buy?
That's what Mo was saying. Want to do Intel?
I was
People
thinking
were
Intel,
saying-
or we just go back to Southwest and look at it that way.
People were asking
It's
for
Southwest.
Intel.
Yeah.
People were asking
But
for Intel.
I'm kind of thinking, instead of looking at Intel now, I mean, we could do Intel now. I was thinking maybe we go back to Southwest and show the reasons that we did buy it and then why we exited. And we kind of walk them through that process from beginning to end.
Yeah, people are saying Intel.
Intel? All right, Intel.
Simple Living just said, Peloton is disruptive in killing pets and toddlers. Other treadmills don't.
Yeah, David said the same thing. It's disruptive. We better buy.
To even understand the child crusher Peloton. Okay, so now we're taking here's the point though, about Peloton. We have a video coming out. Some of the things I want to understand about Peloton is, one, what's the split between the revenue between the recurring software and are their machines a loss leader? In the video that we're going to release, you'll hear me talk about how video game companies will sell their console at a loss because they're okay with that. I'm okay with that. But you have to understand the different revenue and different profit in these divisions and understand where's the growth coming from. The only unfortunate part about Peloton I don't like is they don't report unit sales. They report revenue growth and things like that. So they're not showing units. I have to wonder, okay, well, what's the potential? How big can it get? I do think they're the market leader in treadmills and bikes, but it's not a hard business to enter. I mean, it's not a moat, as Bill Warren Buffett would call. I don't perceive it to be a moat. So let's ignore that for right now. Sorry to take the switch on you guys. And this is going to be part of the whole laid back environment of these live streams with the patrons. So let's go to Intel. Pause and get the child murder chain. Jesus Christ, guys. You guys are mean.
Lily, we are doing a whole video on Peloton. It'll come out very soon. And you probably, knowing you will not be shocked at Paul's pricing of Peloton. spoiler alert, it's still nowhere near where it needs to be. So keep going.
Okay, so Intel. Let's talk about Intel, because here's why Intel is so important to me. Let's just skip right to the 8 pillars on Intel. Have you seen anything prettier than this before in your life? I mean, guys, this is incredible. Absolutely incredible. They're a declining company with increasing cash flow. They're buying their shares back. They have plenty of cash on hand. The price of free cash flow is only 15 over the last 5 years. I still think their PE is 12 over the last year. Now, here's the issue with Intel. Why is it selling so cheap? The reason it's selling so cheap is these companies like Apple and other places have said, we're going to make our own chips, okay? So one of the first things I say is, when people overly dramatize something, which is usually the case, what percentage of their revenue came from Apple? That's a very important question to ask, okay? Because I'm going to look at this income statement, and I'm looking at the last 4 quarters, and guys, this dead company has grown in revenue every year. The last time they had a decline in revenue was 13 to 14. That was the last time they had a decline in revenue. They've just been going up and up and up. Even last year when they were dead, they did 77, they did a record revenue number, okay? I don't understand. So this is the same thing I had in Microsoft in 2012. If it's a dying and dead company, why are revenue and profit increasing every year? I just didn't understand that. Same thing here with Intel, okay? But there are important questions to ask, because the vast majority of value plays have a reason why they're selling so cheap.
Keep going, Paul.
No, you go ahead. Okay, so with Intel, Mo's pulling up some of their stuff. Mo, do you want to take over a little bit, or do you want to talk about?
I mean, I'm just writing down things. I'm writing down things that I can think about right now that going in before I read the 10K, I'm thinking of things that I want to look for in this company. So first and foremost, I think of the chip shortage that's going on, COVID-related stuff, losing Apple. I want to see what part of the revenue is that from Apple. What do they have a plan to replace that? Tariffs. I mean, we have to think about it.
Tariffs don't bother me.
It doesn't bother me, but if let's say that there was going to be hints of getting rid of tariffs, that's awesome for Intel.
I don't think it helps or hurts Intel.
From a public standpoint, it does.
So here's why I don't worry about tariffs. Where are chips made?
China.
They're all made in China.
Yeah.
Like Apple, where's Apple making it? Like, it's going to be made overseas anyhow. So why are we worried about tariffs?
Okay.
Everybody's going to be affected by that.
Computers and systems. Like, what are they going to get into? That's kind of going into what the Apple stuff. What are they going to replace Apple with? Future ideas that they have. This new CEO, he's been talked about, Bob Swan, a lot. I want to see what he's done in his past. And I mean, maybe it's not as important now because he's been there for maybe over a year. But that's something that I would look for. If I was invested in Intel, I would really start looking into what Bob Swan has done. So go ahead.
So remember one thing. So then let's go to the cash flow statement. So here's another thing about Intel I want to talk about. Look at this cash flow over the last 5 years, guys. 11.4, 11.8, 12.5, 18.2, 19.2. Guys, when a company is dying and their cash flow is increasing, first off, it's your first time the company's not dying. But second, this is a company that has the cash to go turn things around. They can go make investments in other areas, make investments in other businesses to go increase their chip production or enter another business completely. Does that mean it's for sure? No. But if I'm going to bet on a dying stock price because the company is still growing, I love that. I absolutely love that. Look at their shares outstanding. Their shares outstanding went from 4.7 billion down to 4 billion. Go in their 10K and look at what their future plans for buying back shares are. The other thing we don't talk about enough, look at their return on assets and return on invested capital. Well over 10%. This means they do a good job of making earnings on their invested capital, the debt and equity in the business. They do a really good job of return. I believe I ran the numbers on this, and in the market right now, the current average is like 3 or 4%. Now, Charlie Munger says that in any company, what their return on invested capital is basically what they're going to grow per year. I would pay a discount for ones that have a low return on invested capital and a premium for ones that have a high return on invested capital, because that's how much money they're making on the money in the business. So, do you have the 10K up, Mo?
Yeah, I'm reading through it right now. This is actually something, I'm just looking at their strategy right off the rip. They say, first we experienced the PC era, then mobile, then cloud, and now we're entering distributed intelligence. But the point is that they adapt. I mean, looking back in Intel's past, they've always adapted to the new thing, and they've capitalized on that. So they've recognized what they need to do, and that makes me happy. They're going into AI, 5G, autonomy and this and that. So that's good. I mean, Intel's always kept up. So they're going to keep keeping up, I'm sure.
So let's also look at, let's see, what percent of revenue for Intel came from Apple? Look at this. June 2024, UBS analysts. Guys, there's a little thing called Google. I don't know if you've heard of this website before. Let me write it down right here. There's a website called Google. It's a search engine. Now, what a search engine does is whatever you type in there, it'll give you results. This is how you should do some of your research. I know it sounds so basic, but it's true. And look what it says right here. UBS analyst, now I don't know if he's right or not, says estimates Apple accounts for only 2 or 3% of Intel's annual revenue. And that won't be going away immediately.
And that's great.
Apple said Monday it still has Intel-based Macs in the pipeline. And the full transition will take about 2 years.
Yeah, so to me, I look at that saying it's really not that big.
So high side, we're talking about $2 billion in revenue. Basically all of last year's growth going away. Mm-hmm. And yet people heard, and the one thing I heard about Intel, they're losing Apple. Now that could be the start of something bigger, true, but Apple's also the most financially flush company in the world, basically. They have nothing to do but go invest in themselves. One way of doing that is saying, okay, well, we might as well start making chips because we make all this other hardware anyhow. But there's still other companies in the world that can't do that. They don't have $50 billion a year in free cash flow like Apple does.
And I think to that point, it's good that Apple, they went and made their own chips because they wanted to make their own chips, not because the chips that Intel was making sucked. So if Intel's chips sucked, then I'd be like, oh no, now what do we have to do? It's just that they need to reinvest in themselves and go make their own money and make their own chips. So that's that. I'm just going to keep reading through this 10K.
We did have a poll.
What's going on here?
We did have a question from Tim I wanted to get after.
Yep.
Okay.
And frankly, I think of this sometimes often. Mm-hmm. In a very simplistic term, he asks, how do you, I don't want to jump the gun too much, but we may make sure we answer this, is how you calculate your strike price and your target price after something meets the 8 pillars, or does it always have to meet the 8 pillars? Paul, I would say...
No, that thing has to eat, guys, very rarely does anything hit the 8 pillars. It just happens to be Intel. And I actually think Intel might have not have had 8 pillars when I first looked at it.
Oh no.
Well, I don't know about, oh no, but which one was bad? It might have been 8 pillars from day one.
I thought there was one that was off.
I don't recall, but
I don't either.
So here's the thing, guys. One of the things we're going to add to our software is a stock analyzer tool. Right now, I use YChart's Excel sheet. Now remember, this is an Excel sheet I can't give to you because it's based on YChart software that's installed on my computer. But what I would do is I would sit there, and it's going to be something similar to this. I basically look at it going, okay, I type in my assumptions. I type in some assumptions here. And it's going to spit out for me. If I want a 15% return on my money, I make these, it shows me the annual income growth, profit growth, free, blah, blah, blah. I sit there and say, what net present value do I want? What's the future PE? And it gives me a range of prices. Low end, $45, high end, $65. That's a 15% return. So if I buy somewhere in this range and it falls somewhere in the middle, it's probably selling for where I want it to be to make a 15% return on my money over the next 5 years. That's how I do that. But I have to read about it to understand what my assumptions might be. Are my assumptions a 50% drop in revenue growth? 16% revenue growth is probably not sustainable. And a lot of that's from acquisitions. So I'm gonna discount that one greatly. But profit margin, why would profit margin drop? I don't know. Profit margin probably stay the same. So I probably want to be at the high end of profit margin, the low end of revenue growth. So it probably is a $50 to $55 company if I want to make 15% a year on my investments. That's a pretty good return on my investment. So one of the things we're going to do in this software, it'll be coming out this year, will be the stock analyzer tool where you can put all your assumptions in and it'll say exactly what you need to pay. It'll ask you, here's the revenue growth the last 5 and 10 years. What revenue growth do you want to assume? Here's the profit growth. What do you want to assume? Here's the cash flow growth. What do you want to assume? Here's the shares outstanding growth or decrease. What do you want to? It's going to ask you. It's going to tell you all the data and then say, what are your assumptions? And then it'll say, based on this, you should pay X amount of dollars for the price. And then, what do you want to make per year on it?
Wow, all this is in the. Wow, this is
It'll
incredible.
be available in it.
Isn't that amazing? I didn't, Paul. Viewers.
How did you not know that?
I mean, I didn't. You throw around these words, and I'm like, we looked forward to the software for so long about getting the 8-pillar analyzer, but that's incredible, Paul. It's like basically a price target analyzer. What are you calling it again?
Stock analyzer tool.
Stock analyzer tool. Listen, folks, we'll take a short little breath here at the moment. I would consider yourselves very lucky, considering we have 34,000 subscribers and only 50 of you in this chat. It means that if you've ever wanted a really exclusive access of us, you're getting it right now. And congratulations, this should be fun. So we'll keep going. We're gonna go for about an hour here, and Paul, keep going with what you're up to.
So when we do all of this, guys, you're gonna input all these assumptions and how much money return you want to make. Now watch this. If I change my assumption from 15% to 20%, what should happen to this price? It should go down because I want to make more money per year. And look, if I'm able to buy it for $36 a share, then I'm going to expect to make 20% a year. The high side of all my assumptions are 100% of revenue growth will continue, 100% of profit. I should be willing to pay $53 a year to make 20%. It's currently selling at $55 or $56 a share. Again, if you want to buy it for what it's worth, 10% return, which is historical numbers of the stock. Oh, and by the way, guys, time out. The one thing this tool doesn't factor in shares decreasing. So I actually should be willing to pay more because this does not factor in shares decreasing, but your software will. Your stock analyzer tool will divide the value of the company by the number of shares. If a company is consistently buying back its shares, it will make every share worth more money. That does not factor in here. So right here, I believe based on 10% assumptions, the stock is currently selling for what it's worth based on the worst case. Revenue growth falling in half, profit margin being 20, worst case here. And on the high side, $83 a share. But again, that doesn't factor in buying back shares. If they buy back 10% of their shares in the next 5 years, you have to add 10% to this. That makes this 61 and this 90. So these are the things that we're gonna do that are gonna make it easy for you to bring your assumptions in. Again, we won't be telling you what your assumptions to be. We'll tell you the 5 and 10 year numbers of everything and tell you what assumptions you want to make.
Simple Living is asking, isn't this just a simple DCF model, or does it do more?
Correct. No, it's a DCF model.
Okay, what does that stand for?
Discounted cash flow model. We're just building a discounted cash flow model. The only difference is the one thing we're going to add to this, and this is not a day one thing, guys. We're going to allow you to type in your assumptions and then say, now go find me the stocks that meet these assumptions.
Come on.
Yes.
So this is so
By the
important.
way, hear this.
Hear me now?
Hear this. You'll sit there and say, these are all my assumptions. This isn't day one. This is going to be somewhere in the next year. Here are all my assumptions. Go scan all the stocks you have in your in the entire system and spit out the ones that meet these assumptions. That's a huge thing, guys. It's going to let you do another screener on top of the screener. It'll tell you, assume 50% drop in this, 50% drop in this. Tell me the stocks that match, and then go do your research from there.
Come on. My son Gio is going to love this. When, of course, Paul, is when you say it's going to happen, of course, people start asking when. Your thoughts on all this coming out? This is absurd.
I'm not going to give timelines because just know that every single month you're in the software, it's going to be better. That's it. Just know that you have gotten such a great deal on great software, and every single month it will only get better. That's it. I mean, I can't imagine anything be better than this. Like, imagine if literally every single time you got married, you just knew every month would be better than the last. Imagine in life, I always tell people the reason my life is so great is every year is better than the last one. I'm happier, I feel healthier, I feel better about life, I feel more optimistic, things like that. No different than software. Every month, every quarter, every year will be better than the last one.
The idea that, Paul, I know it's very simplistic. The idea of buying high, buying low, selling high, everyone says it. But when you actually break down these stocks and give us a target buy price, and if you buy too high, you can't make, I never think about that. Like, if I buy too high now, I can't make those gains in the future, Mo. I've already factored those gains in my initial price, whether it's a stock or a house, Paul.
And a lot of people don't think that way. That's what's cool. The Peloton video that we just did, Paul said that he broke it down very nicely. And he's like, you're basically paying $25 billion for the company now, and you expect them to be $25 billion in 5 years.
Yeah.
And the way he laid it out was very nice.
So Matt Young made a great comment. Love your commitment to innovation, guys. Much respect. Where is it? That's exactly what I want everybody to see. We're here to innovate over and over on investments. This is the start of it. You guys are literally going to look back 5 years from now, and you're going to tell people, I was one of the first 1,000 subscribers of this channel. I'm literally saying that right now. We're going to be the #1 finance channel on YouTube. 1,000%. So I want you guys to see that we're always going to be innovating, always going to be doing more and more. Tim is making software. He's great at making software. We're doing it, and we're going to make it better and better. Everythingmoney.com will be your go-to for all news. And by the way, the software, the data we're going to bring in isn't just stock data. We're going to be bringing in economic data. We're going to buy data from my data spend at some point in the next 5 years will be over $1 million a year. I can almost guarantee that. We're going to have so much data, it's going to be insane.
$1 million in gold bullion you'll be paying?
And guess what?
Don't care.
Exactly. I don't care, and I can't wait for it.
Holy shit. Okay. Susie, why did you change your last name? It's bothering me. You know, I love you.
She did that because she got banned off of YouTube.
Who?
For saying what?
Why?
I don't know, but she thinks that it's because she kept donating, and eventually YouTube just blocked her. And she couldn't attend the live shows, my morning shows for like 3 days and stuff.
Does that even make sense?
No, but that's the reason.
Well, she's got her photo back. I see her beautiful
out.
face there. She's back, Paul. She's back, killing back. Okay. Paul, what the hell were we even talking about besides the website, which is incredible?
We were talking about Intel.
Shall we keep going?
Kruger said, can I just pay you more money now, the value, Paul? I want you guys to have the value. You guys committed early and invested in us. That's the whole point of it. So back to Intel. Mo, what else have you found about Intel?
You know, I just started going through so the next thing that I go and I look at are the risk factors. And a lot of these are just generic risk factors. Like, we face significant competition. Cool thing about Intel is they came in here and they said who they face competition from and for, and like the products it's about. So AMD, Qualcomm, NVIDIA, Taiwan Semiconductor Manufacturing Company. They also said that their R&D needs to, they invest significantly in their R&D. That's no surprise. But they also take very high risk, what did they say here? High risk investments in new businesses. So go and look at the past, see how they've done with that, and see the dollar amounts that they put towards them and the ones that are successful. I'm sure Intel has a method to their madness, but that's one of their things. And going forward, 5G is going to be huge. So they're going to be investing a lot in 5G. So these are the different things that I look for in the risk factors.
Do me a favor. Go to sec.gov and show them how you found the 10K.
Oh, sure.
Start from the very beginning. I'm going to the so go to sec.gov.
Okay.
Not to be confused with healthcare.gov.
Awkward.
We're going to Switzerland next year. Paul, I have my my interview to get global entry got moved up from September to next Wednesday.
No way.
So pretty good.
Where?
In Pittsburgh?
No, I don't even have to go to Pittsburgh. They opened it back up in Cleveland. Something happened. So let me...
Seriously?
Seriously. Tim is doubling down, and I asked him, Paul, real quick. So you go through the pillar process.
Yep.
And gets to cash flow and divides by 5. You got it. To get our average 20 time. That gives our market cap. And so either Tim is asking, is that always what we kind of want to put?
Yeah. So guys, you want to get to a point where you understand the qualitative aspects of the business, and then put it into, go find a discounted cash flow model until we make ours.
I see. This is where we're
trying to put it in here.
Okay.
And go, okay, I'm going to make my assumptions in here. These are all my assumptions. It's going to spit out a price for me. Because my assumptions are based on the qualitative aspects of the business and quantitative. It's a combination of both. That's what I do. And then, because at the end of the day, these stocks are just about numbers. You put in assumptions, it spits out an answer.
I'm with Tim though, Paul. I quite often, I just figured out when you give a market cap as a percentage, can I factor that into what price target I want to buy the stock at?
For sure. So now here's the other deal. If you want to be safe about it, and let's say, for example, you said, I'll tell you right now, you guys want to get the value of your thing right here? If you only buy companies that pay the top, if you only concentrate on S&P 500 companies, you buy the top dividend, top return on invested capital, and the lowest price of free cash flows, you'll do really well year in and year out. But if you want to make individual plays, you've got to find, that's why we're going to create the stock analyzer tool. You've got to be able to sit there and say, okay, you can do it by hand too, guys. If you want to sit there and say, okay, I'm going to sit there and say the cash flow this year will be 500, then 600, then 700, then 800, then 900, and then I'll sell it for $1 billion plus, then I'll sell it for 10 billion plus the 1 billion in revenue. Great. Now you go equals, you're not going to like this, equals NPV of 15% for value D3 to I3. You should pay $7 billion for this company. That's all a discounted cash flow model does. It asks you for your cash flows, and then it discounts it back. So I sat there and said, okay, 500 million, 600 million, 700 million, 800 million, 900 million, $1 billion plus sell it for 10 billion. That means today, if you paid 7 billion for it, and then you got these cash flows for the next 5 years, 6 years, 1, 2, 3, 4, 5, 6 years, you would make 15% return on your money. So that's all we're trying to do here. I know it sounds a little confusing. This is actually the easy part of investing, and it's not confusing. It's just when it's new to you, it's harder to understand. What we're trying to do here is understand that every investment is a discount of cash flow. You're going to take every cash flow for the next whatever. Now, the difference is with stocks, you also have the extra element of they're decreasing the number of shares. So as the cash flow increases, you're also getting more of that percentage because the shares are declining. And that's what I don't have in my current stock analyzer tool. Does that make sense? Does that make sense, everybody?
Yep. You want me to go through the 10K real quick?
Yeah, go for it.
Okay, so guys, go to the SEC website, sec.gov, go over to filings, and drop down to company filing search. Click on it, type in whatever company you want. We're going to type in Intel, and boom, there you go. There's all the filings from Intel. I mean, you can go back as far as you want to. So we're just going to find the 10K annual reports, and 10K, boom, there you go. Pull it up as a PDF and download it as a PDF. I like to download it as a PDF so I can highlight some things in it, and it's as easy as it is.
And by the way, our stock analyzer tool will allow you to make a value based on earnings or cash flow. That way you can switch back and forth, because most people in the world care about earnings. Some people care about I care more about cash flow than earnings, because they do differ, but over long periods of time, they should be the same. Now, Matt asked the question. What was Matt's question, Seth?
This is a good one. Yeah, this is a good one.
This is a good question.
Because I don't always get this. I'll tell you what, I'm not kidding, folks. If you can get your children, if you have children and you want a better life for them, my son has taken to this like a duck to water. And at 11, he watched our Stock Mo reaction video. And Stock Mo talked about how he was a long-term investor, but then Trader Mo, you criticized him for not selling when it reached a certain price. And my son said, at what point, how am I a long-term, but I have this sell point in mind?
Yeah.
And so this is what Matt is asking, I think, Paul, is once you go through this process, how do you know when to let go of a stock?
Great question.
When it reaches the high end of your assumptions?
Great question. Here's what I want. So, as an example for Intel, usually I sit there and say, when it hits your price assumption, sell it. The reason being is if you have other options out there that are better, go for it. I will say this though, if you find a good investment in a company with a high return on invested capital, you might want to keep it. Because when it hits your price target, this high return on invested capital will allow it to grow at a much better rate. Again, that's not a set for sure. With 10,000 companies out there, you can go find better and better deals. A lot of people will sit there and say, okay, this one hit my price target. I have Intel worth $90 a share. When it's all said and done, I got to $90 a share. What do I do now? Well, I found another company, XYZ Corp, that I think is worth 70 and it's selling for 38. I'm gonna go take this 90 and buy my shares in this one. Just all depends on what you want to do. Now, if you want to be like Warren Buffett and find really good companies you hold for a long period of time, I would look at return on assets and return on invested capital, because this is going to tell you how they're going to make their money long term. That's the big thing. If they're buying back a lot of shares and they're at full value, it's only going to help you. It's going to drive up that per share profit and cash flow. That's how you know. Is it a set in stone? Again, everybody knows, Paul, I've watched your videos, whatever you're comfortable with. It just all depends. I'm the guy who wants to sell them when it hits my price target and go find a better opportunity. By the way, all along the way, I'm looking for other opportunities. So when I go, I might sell it before it. Oh, it's at 90. I think Intel's worth 90, but it's 85. But I just found this killer deal. I just went and analyzed, and it's selling for half. I'm going to sell my Intel and go buy that one.
Also, I want to talk about big run-ups very quickly. So let's talk, like Southwest is a good example for us. Where's my thing? Southwest, we had valued at, I think it was $45 to $60 a share, something like that. We bought it at, Paul, what did we buy at Southwest at? Do you remember?
25, literally on the note. I literally bought 25.00. 25.
And let's say we had it valued at $60. That thing went up to like $40 or $45 in a couple of months. And at that point, we were like, okay, this run-up is absolutely crazy. Yes, it's still under what we think is a value, but the run-up happens so fast. Sometimes it's hard not to take crazy gains like that on a position and move on.
Like Discovery. Remember Discovery?
Discovery too, yeah.
Yeah, Discovery like flew up beyond belief. It's like, how do you walk away from that?
Especially when you're seeing the price start moving up like it was with airlines, and literally when it was $45 a share, nobody was flying on a plane. So we were looking at it saying, well, what's going on here? We thought for sure it was going to drop back down. Of course it hasn't, because stocks only go up, bro.
Mattia is asking, how do you estimate future free cash flow for fast-growing companies?
So what you would do is, I would sit there and say, okay, I'm going to look at the cash flow statement. What makes up the cash flow statement? The cash flow statement is going to be made up from cash from operations less your capital expenditures. You need to go understand what the company is doing about capital expenditures. For example, look at this capital expenditure line over the last 10 years. It varies greatly. 11 billion, 11 billion, 11 billion, 9.4, 6.7, 10, 12.7, 15.5, 15.5, 16.2. So cash flow, you would also make assessments on, this is part of the qualitative aspect of researching the company and talking to investor relations at times and saying, hey, remember guys, this is for very, very deep dives. Warren Buffett believes in owning 7 or 8 companies he knows very intimately. I'm a believer in own 30 companies that fit a higher level. I think this is too much work to do. I actually personally believe you shouldn't do this much work. I believe you should find 20 or 30 or 40 companies that you understand, not from a 1,000-foot view, not from a 1-foot view, maybe a 100 or 200-foot view, that you go, you know what? I think this company's going to be around. From all the metrics I see, I think it's undervalued by X. Let me buy them and buy 20 or 30 or 40 of them. Have a portfolio, and guess what? 10 of them are going to do lousy, 10 of them are going to do better than you thought, and 20 of them are probably going to do somewhere in the middle.
So tell me this, though, is people are asking when they see my portfolio, which is updated in Patreon and Discord, is, well, why do you also suggest just doing the magic formula stocks?
Because I do, that's why I said before about our back testing. It's back testing. The thing is the discipline. The magic formula still buys stocks that have a low PE and a high return on assets. And he's shown over time that over 20-some-year periods of time, they beat the market. Great. It's all about how much work you want to do. The more work you do, really understanding it, not just fake work. Look at Gary. Gary beats the market by 6% a year over like a 15, 16-year period. That's a lot. He does a lot of work. I don't want to do that kind of work. Gary's interviewing ex-employees, suppliers, ex-customers, everybody. I do not do, to me, that's way too much effort. But he's in the business of managing money. He wants to get a high return. For me, I want to find good companies that I can understand very quickly, that don't seem to be shady, and buy them at good prices.
Someone asked me in my portfolio as well, and Mo, maybe you can help me out, because I don't know. I'm coming in at this. Someone said, do you have stop losses on these? Should I have a stop loss on every?
No, that's the point of. No.
Hang on a second. That's not even the point of. The point of the magic formula is you hold it for a year.
Yeah. No matter what.
Okay, so I don't think we all know this, Paul.
Yeah.
Like,
Did you read the book?
No, listen. He never talks about stop losses. I'm sorry. That's not what I'm talking about. I know I'm going to hold it for a year, and that's what I'm informing people to do. Other people are saying, why don't you just put a stop loss? Why don't I put a stop loss on everything? So if
here's
it goes
why.
Down,
think about that for a second. Let's look at that for a second.
Please do, because
a stop loss is when you buy a stock, let's say for $10. You say, hey, I'm going to do a stop loss at 10%. If it hits 9, it automatically sells. My comment is, if you do proper value investing and it drops to 9, your first step is, let me make sure I'm right about this.
I see.
If I'm right about it, I'm going to buy more. Goes to 7. If I'm right about it, I buy more. If it goes to 5, at some point, you got to realize, go find, I like seekingalpha.com, because you'll see a lot of the pluses, you'll see a lot of the bull and bear stories for everything. Go find group. That's why we have the Patreon. We want everybody to go work together and say, hey, but I don't like this. Remember one thing, no company's perfect. Every company has problems, and no investor thinks alike. Gary and I differ, Mo and I differ, Seth, everybody differs. Doesn't mean that everybody's own method doesn't work. It's about sticking to it.
Well, we like yours. We want you, when you say
well, you don't necessarily like mine. Why would you like mine?
Well, because you're teaching us.
I'm teaching you guys a way of thinking.
Okay.
I'm teaching you guys to think and say, okay, well, what am I going to do here about this? Do I think my method works? Yeah, but for me it works. But if it doesn't speak to you, there are other methods like mine that still have a value-based aspect that do work. I think Gary teaches me. I don't agree with Gary. Gary literally interviews ex-employees of companies. It's like, hey, what was it like working there? I'm like, why would you? I don't get that.
This mythical Gary, he needs to get on the show. We've talked about him far too long to not have him on, but we should get that done. Joseph asks, can you talk about applying cover call strategy to Magic Formula portfolio? So, Paul, you and I talked about some covered calls with my Magic Formula stocks, and some of them actually hit. But then that kind of fizzled. Is it because options trading has become a little more difficult?
Who fizzled on that one?
Well, it was me, of course.
Yeah, it doesn't mean it fizzled. I still write covered calls in every stock I own. But my goal with covered calls isn't to make big money. My goal is to make 3 to 5% a year on my covered calls.
Yeah.
So some are gonna, and I never let them ever take away from me. So you shouldn't allow that to ever happen. Take the loss on the options before you take a loss before you sell the stock. Because your goal for your Magic Formula is just to own the stock for the 1 year mark. Don't deviate like you already have. Just don't deviate. That's the point. I don't care if it's literally fraud. I don't care if the company comes out and says, we are invading France. The point is you keep the stock.
Why is that?
Because that's the formula. In all those 20 years of those stocks back-tested, you tell me there wasn't a time there was fraud in one of those companies, or there wasn't a reason to sell it? Of course there was.
And remember, it's about some are going to win big, some are going to lose big, and the rest are going to fall in the middle. But the average of that is going to have you hopefully beating the market over a long period of time, not year to year. So let those, it was EBIX, right?
Yep.
Say EBIX went to 0. Okay, well, I'm sure there's something in there, like Discovery, that was up 100 and some % at some point.
Yeah,
you know what I'm saying?
For sure.
So the idea is to balance it out and let everything fall in the middle.
The thing I found about investing is whenever you have some sort of strategy process, the second you start bringing your human emotion aspect into it, just start throwing away your returns.
You're dead.
Yes, Tim is asking another question. Again, these are some of mine. He says, Tim, I don't know if you're new. This might take a long time for you to get. It's taken me a long time. But he said, does the little book work in today's markets? Well, all the time we find...
People say value doesn't work now. The little book is a value play. And of course, the last 5-6 years for value have been sucky. But I think the next 10 years will be very good for value. Every single asset in the world, guys, goes through ups and downs. And they're rarely ever always good. Actually, they're never ever always good. Real estate will do better in some times. The point is, buying at low prices will be better than buying at high prices. I do believe in the little, because there's a difference between I'm going to invest in stocks because the NFC won the Super Bowl versus the AFC. That's a back test that everybody goes, oh, that's why back testing doesn't work. No, value back testing does work because it makes sense. Buying cheap stocks relative to their profit and earnings. That's like sitting there saying, the teams that are wearing a red uniform beat more likely than blue. That doesn't work. But if you said to me, Paul, the team that had 3 players on the court versus 5 tends to lose 98% of the time. That makes sense. Why? There's less people. There's less talent. That intuitively makes sense. So that's why I sit there and say the book that beats the market will do well because return on assets and a low PE makes sense. If you find companies with low PEs and high return on assets, they're probably going to do very well.
Back in the middle of last year, Paul and I back tested so much stuff with so many different metrics, and literally every time, no matter what value metric we picked, it beat the market over a long period of time. Of course, we had our preferences of which ones are better and which ones are worse, but it was incredible to see no matter what value metric you put in there, over a long period of time, it was beating the market.
And if you did the opposite of saying, okay, well, find me the fastest growing, most expensive ones, they did not beat the market. Yeah, over long periods of time. It's not a fluke. I mean, it's funny. Some people sit there and say, oh, backtesting doesn't work. Well, yeah, backtesting doesn't work when you're looking for things like, oh, let me see if like the whole buy in May and go away. There's no reason why buying in May.
Dumbest thing I've ever seen.
But this is no different than, when January is up, the rest of the year does this. Even though it's worked, there's no logical, why would it matter? Why fundamentally does it matter if stocks are up in January versus down in January? It just happens to be that way.
I love the sell in October just because you always sell in October.
Yeah, but if I'm going to buy based on fundamentals that work, I'll probably do. But remember, it's not buy 5 or 6 stocks. Buy 30, buy 40. And you'll probably do. Not a single back test we did that involved 2 or 3 value metrics did not beat the market over a 20-year period. Listen to that again. Not a single one that involved 2 or 3 value metrics did not beat the market over a 20-year period.
Oh, wow.
And you might sit there and say, ugh. And by the way, the last 10 years were pretty crappy, and it still beat the market. That's what I'm sitting there saying, kids.
So, I released my portfolio yesterday, and I have to chuckle because I have my little book to beat the market stocks, some of which I have no damn clue what the hell they are. That gave me, I was up, Paul, since last July, I was up upwards of like 58, 59%. Discovery has tanked, MSGN, a couple other ones have tanked. I'm up 40% since last July. But the hilarious part is the stocks that I pick from this show and the ones I kind of fall in love with, I'm only up 25%. This is CCL, this is Biogen, this is Cisco, Jets, MSGN.
First off, it's wrong to look at any of these things. That's why value investing so hard and investing so hard. Because we always look at it and just what Seth said. I'm only up 20. What are you up now on the Magic? By the way, when 40%. He was up 50% in the Magic formula, what did I say to you?
It's not going to last.
I was like, listen, that's not going to happen. Yeah. Gary is up 100% literally in the last year, and he jokes every single month and goes, like, we'll have one month we had a big month of like 30% gain. He goes, please don't annualize that. We all laugh because I'm sure there are people out there who would say, I made 30% last month with Gary. I'm going to give him more.
Yeah.
We didn't. We're like, Gary, good work. Mm-hmm. There you go. And by the way, if the market goes down, will I discuss giving Gary more money? Yes, probably. But I'll also probably sit there and say, I have my own portfolio to do.
What do you consider a good ROI over a 10-year period?
Well, let me ask you this. What does the market do?
Yeah.
10%?
Yeah. So if you're not trying to get north of 10%, like to me, look for companies that are going to make you 15%. Because if you're not, just buy ETFs. Why do all the work?
SPY, or just
exactly. Vanguard,
be done
SPY.
with it.
Yeah.
Why work?
Why do the work? And by the way, on top of this, if you write covered calls and add 3% a year, you make 18%. Even if you fall in the middle, even if you match the returns, here's the other thing, guys. Just matching the returns, you're going to have less risk by buying value stocks. Because remember, value is good because it also doesn't drop as much usually when stocks fall. So if stocks fell 40%, your value might be down 30%. And you might be like, that's still a lot. But if you put some covered calls on that, make 3%, you're like down 27% versus 40. That sounds pretty good to me.
Boys, let me know this. I don't even know what I'm saying. Do we announce, Paul? Do we announce our picks? If you're buying in the morning, you buy. Paul, when you buy, are you announcing it on our Patreon or Discord?
We do it. No, we do it only for the. I do it for my.
Yeah, it's for Paul's super shorts.
Like my super shorts.
For example, yesterday I went in and sold puts on eBay. I immediately announced it to the Paul's super shorts.
Oh, okay, this is for the super shorts.
Yep.
This is what you get for that money. Okay.
Yep, that's what you get for that money.
Okay,
and guess what? You shouldn't mimic my investments. We announce our investments. Yeah. You shouldn't mimic them. And over time, I will be 100% invested in stocks and probably 30 or 40 stocks. And I'll have a bunch of covered calls and other puts. And I'm also going to sell puts against stocks that I want to have that I would replace. So remember, what I'm doing, I can do because of large amounts of capital. There is a bias there. Like I can write a lot of puts and calls that not other people can write. You won't be able to match that. I can literally underperform you by 5% a year in stock picking and still beat you because of my other abilities to do that.
The Frenchman's asking, where should we put our money while we wait for stocks to go down? I have enough cash to maybe write a few puts. Should I just put in ETF or hold it until stocks prices fall? Interesting question. I have some cash. I'm sorry.
The money that you're having for retirement, put in low-cost ETFs and don't think about them. Yep. If you have 10% of your portfolio that you're playing with, that you're going to try to pick stocks, be patient. Go find your stocks that you like. Go do your research. Find the ones you like. Even if it's buying the 8 pillar stocks, I think you'll do fine with that one over long periods of time. When we back-tested the 8 pillar stocks, it beat the market. I don't remember by how much, but it was significant enough where it mattered. It was like 3 or 4% a year over a 20-year period.
You changed the pricing for the super shorts tier. Can you describe it to some of them out here? Because some of them might want to upgrade.
So guys, I'm not allowing any more super shorts in from the outside. The only super shorts members will be allowed are current patrons. And anybody who's currently a super shorts member, you get a 33% discount by paying the year in full. And the reason for this is I want to make sure people stay committed. We've had probably 60 people buy into the super shorts and 20 people leave. I don't like that. I want people to get committed. If you pay a year up front, you're going to show commitment for a year. It's non-refundable. Anybody who's currently a member, you get a 33% discount by paying up front for the year. Anybody who wants to upgrade, you get a 20% discount to pay up for the full year. And it's only that. You can only do that. So let's say, for example, you're in the Bid and Ask Nation and you want to upgrade. It's normally $250 a month, which is $3,000 for the year. You get it for $2,400 for the year. Okay? And the reason being is it's a valuable. I got emails from people, Paul, what am I getting for it? Guys, it's not just about numbers. It's also about mentality. It's about conversation. I mean, it's a very active, it's no coincidence that chat's the most active chat.
I would say if
Actually,
you're,
Bid and Ask probably more active now.
if you're thinking about bumping up, Paul typically quotes people at $2,500 an hour. And that's pretty much the math of how much is that much would you make in this world, Paul? I think that is. Yeah.
What's
I think,
that?
Yeah. You make about $2,500 an hour, right? When you're quote unquote working.
Yeah,
Anyway,
I mean,
it's near
something
there.
like that.
It's near there. So I mean, you're getting an hour's worth of Paul for a year. This is all your bot. I'm not saying I
But
want.
it's not only that, though. It's the people you're going to meet in there. There are some really smart people in our chat who do thorough analysis, and they have very deep conversations about companies.
Well, and they were also smart enough to get in it when it was $100.
Yes.
So.
And now it's so funny. The $100 people. I had a $250 member go, "Can I please get it for the 100?" No, sorry. But Paul, I didn't find your channel. I'm sorry. I need to respect the people who paid the 100. Now, with that said, I'm now providing more value to everybody by saying, hey, you're not even allowed in it anymore unless you've already been a patron. So this is a even more exclusive club. You can't go to our Patreon and find it anymore.
Cameron's asking, how does a yearly membership work out? Patreon account price, does it get reduced to zero? I don't know how that works.
You cancel your Patreon. Well, first you'd go to Tim. You'd email me and say, I want to upgrade. I forward you to Tim, and then Tim or Nick would charge your credit card up front. Once that's done, you would cancel your Patreon membership, and you'd just be running through us.
Dimitri said he already emailed you. And
I probably responded already.
and he said, does the $2,400 lock you in year after year?
It's every year.
Every year.
Yeah, you get the money. You get it for every single year.
This will never go up?
I mean, minorly. I probably won't raise that group up at all because I just don't care to.
Okay. Well, that's not why we're here, right? Okay. That's not why we're here, guys. I appreciate all the questions. If you have more, you can email Paul at Everything Money or Tim at Everything Money, and they'll get you hooked up. What else can we ask here, Paul? Someone said, there's a great question. M. Kruger asked, Michael Burry thinks that the huge flow in ETFs is screwing up the value of the underlying stocks. Any thoughts on this? This is deep.
Absolutely. When you have a bunch of people putting money in ETFs, it's absolutely 100%. Think about it, guys. What's an ETF's job? Money comes into an ETF. New buyers come in. What's their role? They have to buy the stocks in their ETF. They can't sit on that cash.
Okay.
So let's say, when they go buy all the stock, they buy every stock in the S&P. What happens to the price of the stock then? There's some more volume to the upside. That's why this whole ETF thing is helping cause this big, massive overpricing in the market because everybody's buying ETFs and they're forced. But remember, the same thing will happen on the other side. When people start pulling money out of ETFs because they don't want them anymore, what's going to happen is to sell stocks. That's where the opportunity is going to rise. That's where the opportunity is going to be.
Yeah, you keep saying, and I've been questioning you for years, but you're saying when the shit hits the fan and all this comes crashing down, this will be the channel that people will turn to because all the other bullshit artists out there, Mo, what else could they possibly?
I just keep saying it over and over. Everybody, we do get a lot of comments from our patrons. They're like, "You guys aren't big enough. This and that. Why don't you have more?" Guys, when the market, everybody wants to have maybe they don't want to have a process. Everybody wants comfort of having a process of some sort. Right now, you don't really need one because you can go buy whatever the hell you want. It's just going to go up for you. Eventually, like when March and April comes around, I've said it before. People came to me and Paul and that they think they're crazy now. They came to us at that point and they were like, help us right now when the market was tanking. Because everybody needs to have that comfort of like, okay, I can do something to build it back up. Right now, you don't need that. Everything just goes up.
What's kind of funny, earlier this year, remember, there was about a 5-day stretch where everything was in the red and we had record numbers flock into our live stream.
Listen, and I remember when it happened, I said, this is proving that what I'm saying is
Mo has been saying this for longer than anybody. And my comment is, I don't care. And here's why. We're already growing enough. And I don't mean it. Mo knows that.
It's going to be fun. Yeah.
If you told me, Paul, this is going to be your growth for the rest of your life, I am very happy. Because I think our 2,200 members are awesome. And if we just grow 10 or 15 a day, and the subscribers on YouTube are growing at 200 a day, we're going to have an amazing channel. I would rather have a 500,000 subscriber channel of amazing people like the 34,000 we have now than a 5 million channel, even with 1 million subscribers that are amazing. Because to me, I want the larger percentage of people who really get focused. I can spend more time on those people. That was the whole reason for the software. The software was to build that community. We want to build the 50,000 people of real people who are there to help each other. Is it about me in terms of helping you? Like Laura asked. Sure. And I can help guide. But remember, I also have 8, 9, 10 businesses. I'm not in there all the time. But we will have these things. We will do these live streams, etc. I mean, look at this. We have 68 people watching right now. Our very first live stream for the entire channel was 31 people. And that was open to the public. So this is gonna grow, it's gonna be better, and the best part is you're gonna meet more and more people who are just as good as me, if not better, in investing. I'm not the best investor in the world. The difference is I am willing to go learn more and more. I'm probably not the best. There's 2,200 people in this chat, in our Patreon. There's no way I'm the best investor out of all of them. There's no way. There are people in there that are probably better than me now or are capable of being way better than me.
Well, you have your hands in 12 other businesses.
Yeah. I'm okay with that.
That's a lot of thought. And you play chess a lot and sit around with your dogs.
Oh, yeah. Listen, I have a busy life laying with my dogs.
That's true.
The whole thing about it is we're here to build that community, and I hate that cheesy statement, but there are better investors than me out there. Don't look at me as this, I'm going to all of a sudden provide the world to you. Look at me as a sounding board for learning. Gary, to me, is the best investor ever. I don't listen to Gary all the time. In fact, I don't even talk to him about stocks anymore, individual stocks. I might pick his brain about things here or there, say, hey, Gary, am I thinking about this the right way? He'll be like, yes, but you should also think about this. Oh, yeah, good call. Like, that's the point of an investing community. That's the point.
I like Laura's question.
What was it?
Can you talk about momentum trading? How do you identify the company and what to look for?
So we're going to create the momentum trading thing, and I will be perfectly transparent. The bid and ask and the Paul Super Shorts are getting that for free. We're giving that for free as part of the membership. All the other patrons have to pay extra, so you guys are all getting it for free. Momentum trading is based on the complete. Let me spend the last 5 minutes talking about momentum trading.
5 minutes? We're talking about 5 minutes.
What was that?
We're done in 5 minutes?
Well, we said an hour. We said
an hour.
Oh my gosh, that's.
I can go longer. I can go 15 minutes longer. I got a hard stop though. Like, either way.
I thought we just started.
The Complete Turtle Trader. So what the Complete Turtle Trader did was it was based on. I'm going to make the momentum trading based completely on that book. Okay. What you're going to be able to do is input a portfolio of stocks and say, show me when these stocks hit a buy or short signal. Now, my recommendation to you is don't put a lot of money in this. The thing with momentum trading is don't put you're going to make mistakes. Now, here's the interesting part. In the book, I believe only 25 or 30% of their trades were profitable. Think about that for a second. 1 in 4 trades even made money. But the 1 in 4 that made money made a ton of money. And that's the hard part about this turtle trading. What it does is it looks back at the last 55 days of a stock. First off, it was based on futures, and that's too volatile. I'm going to start with stocks to start. Once I'm comfortable with that, I will go to futures. Anytime the stock did a high of the last 55 days, it gave you a buy signal. Now, anytime it hit a low, it gave you a short signal. Now from there, it has a thing called an N. The N is calculated by this, not complicated, but it basically tells you when do you add to the position, when do you sell the position as a stop loss, and then also there's a complete sell the position based on the low of the last 20 days or the high of the last 20 days, depending on your buy or short. I do recommend everybody reads The Complete Turtle Trader. I devoured it in a day because I loved it. It spoke to me immediately. Chart reading, that speak to me. Momentum trading immediately spoke to me. Do you know why? I like systematic processes. So I'm going to do this momentum trading based on the turtle trading book, but apply it to stocks instead of futures. And you'll be able to pick whatever stocks you want to follow. Momentum trading takes patience. It takes being okay missing 15, 20, 25 trades in a row, being wrong until you find it. Because the idea behind it is this. A stock goes in trends. It'll go in trends. The idea is to find the trends. You're not going to get the high, you're not going to get the low. To make the money here. Short, maybe make the money here. That's the point along the way, is to find.
I saw someone call this a guy walking up a hill with a yo-yo. I heard a couple of I watched a value channel.
Oh, I didn't even think about that.
And it's a guy walking up a hill with a yo-yo, and you want to buy it when it's down, right? I mean,
yeah, but you're never going to buy. So there's a couple of value guys who sit there and say, get the idea out of your head that you're going to buy at the low and you're going to sell at the high. Same thing with momentum trading. In momentum trading, here's what will happen sometimes. The stock will go like this, then like this, and then like this. And guess what? You bought here and you sold here. But you still made this. You still made that. That's the point. You didn't sell here, you didn't buy here, but you made this. If you do this enough, you make a lot of money. That's the point of it. I'm doing it as a way to actually have fun. because I like this kind of trading. I want to have a systematic way of making money. Great news is you can do it in up markets and down markets because it involves shorting too. Shorting is a trend just like going long is a trend. So it's a way to make money on both. That's why I like it so much.
And the other good thing about it is it's incredibly black box. So what I do is a little bit subjective. This is literally you do what the computer tells you to do. Once those moving averages cross, buy or sell, that's it. There's no thinking to it.
And you got to remember, if you read the book, literally the guy who did the best was the one who didn't deviate from the rules. Yep. The second the people deviated from it, it was like, well, I didn't really feel this. I didn't do it. Their returns sucked.
And it's the same thing as going in and trying to change your magic formula.
Yep. Don't change it. Yep. Just stick to the rules. And I'm going to offer it for free. You have to put your own stocks in there, and you keep your portfolio of stocks, 75. I think I'm relying on 100 stocks. And it'll just tell you every day which ones to buy, which ones to sell, which ones to add positions to, which ones to sell completely, all these things.
Dustin brings up a topic. He has his money in Robinhood, and he's worried. Should he be?
I don't know if you should be worried or not. All I know is I'd rather go to a more stable. I mean, there's a lot of scrutiny on Robinhood. If I were you, I'm not saying 10, 12 years ago, I had some money at E-Trade, and I pulled it because E-Trade was having problems financially. Guess what? E-Trade's still around. They were fine. They had plenty of insurance. But I just said, why risk it? So I moved it.
There's a lot of people where they're starting. You know why they're risking, Paul? Because they're going to other channels and they get that bullshit promo code from these dickheads who are.
Which we didn't do.
Yeah.
And
Weeble and bullshit. All right.
Or like bullshit.
We will get to Paul's beautiful shorts and those frothy. Tim.
These are new shorts.
Tim's lumbering over.
These are new shorts, Seth. Though.
Ryan, you can do the turtle trader without shorting. Your returns might be lower, but
now let me describe what you're going to see here. This is a little baby blue little number.
Fabletics.
And Paul, it's really that above the knee quad muscle that you've been doing those squats and those lunges.
I don't do squats.
Susie is going bonkers. The gals just love this tush you got on there, and it's very, very frothy. So okay, we'll get back to business.
201.
Do you want to go a little longer? That was a really quick hour.
Well, listen, I want to make it so that we have the demand for it. We had 65 people. It was a great first session. We're going to get more organized as time goes on. Just like our first live streams, we're very like, okay, let's see what we're going to do. But I want to start picking topics. Real estate will be a factor in there. Guys, if there's any idea you have that you want to incorporate yourself into the channel, like a live stream, like, hey, Paul, I'm doing a real estate deal I'd love to talk about on a live stream, email me, paul@everythingmoney.com. Those of you email me, I'm not always going to respond. I have 5 email addresses, and I get hundreds of emails a day, literally that I need to attend to. So if you send me an email, I don't respond. I do forward it to the right person. If you want to yell at somebody, yell at Tim.
Merch is coming when?
I'm sitting there still 50,000 subscribers, and we're going to start doing merch. And the merch will be limited edition.
Like 100 shirts?
100 shirts, and it'll be pre-order only. Because I don't want to have any inventory. You'll get the best pricing possible, but I'm not going to have any inventory. So it'll be, guys, here's the link. Go order your shirt. Pay for it now. You'll receive it in 3 or 4 weeks.
Guys, we're going to have good stuff. Stuff that we want to wear. Not wearing crap.
Yeah, you see these other YouTubers, and they have the shirts underneath their YouTube channel.
This is going to be bullshit, man. Pullovers, Nike pullovers, Nike dress golf shirts, next level T-shirts. This is going to be good stuff that we want to wear.
Paul, what if you had to describe what's going to happen when the Tesla is given away? Just in your head, the gears are spinning. What's it going to look like? What's going to happen?
I want it to be a surprise somehow. The problem is you can't give somebody a Tesla they haven't picked out yet.
Yeah.
I would have loved to just like find some where that person lives, go to the place,
knock on the door,
and be like, "Hi, I'm Paul," and they'd be like, "What are you doing here?" Be
like Publishers Clearinghouse.
Yeah. But unfortunately, there's so many things that have to work. But it'll be exciting.
And what if they're overseas?
We will figure that out.
Wink,
Why'd you bring that up?
Wink, wink. People ask.
Well,
wink, wink. Yeah, we'll be good on that for sure. We're not full. Yeah. Okay. What do you think, Paul? You want to quit?
It's done. We're done.
Mo, do you want to stay?
Not really.
Listen, I'm very big on when we set a time thing. Let's set a time thing. It's 1 hour. It's a great first hour. It's a great first start. I'm glad we initiated another live stream just for the patrons. Because like I said the other day in the live stream, right now we're about 80% YouTube, 20% patrons, and that's slowly shifting over time. I want it to be 10, 15% YouTube, 85, 90% patrons. Because when our patrons grow, that's the main focus.
And what about, I should have closed with that, Paul, but what about the phone app? Is that a thing that's going to happen?
Oh, yeah.
Phone app.
The phone app. Tim interviewed a developer yesterday. What was that? By the end of this year, we will have the phone app. By the end of this year, we'll have the phone app.
Yeah, I've never looked forward more to Christmas because.
By the way, just keep in mind, in November, I said it was going to take a year to even get the website done.
You did.
You remember that? I said 9 to 12 months. It is now May, and we have the website done, and we'll have the phone app even before the first deadline of the website. Don't forget that. When I originally said I was going to do the software, I said it was going to take 9 to 12 months to get the software ready. But we got 3 developers instead of 1, so it went a lot faster, and I spent a lot more money.
Okay.
Don't forget, we have live stream
Tell them, Mo.
for you guys only tomorrow, 9:45 in the morning. It's very focused on trading. Bring any questions that you have. I'm not teaching anything. I don't have anything prepared. I'm just going to answer all your questions. So private for you guys only tomorrow, 9:45 in the morning, right after the live show.
Oh, and Llewellyn is reminding us, is next month when we started this, Llewellyn, he's saying it's the anniversary. It's the 1-year anniversary for when we did our first stock video.
Oh, is it really?
Wow.
Llewellyn knows this better than we do, but
Llewellyn was the fifth.
He was number 5.
Yeah,
He's
5.
pillar number 5. Shares outstanding is Llewellyn. I love you. You know Llewellyn. I love you.
Wasn't he like patron number 3 or something?
I think it was 5.
Oh, you're actually saying that was patron number 5.
Yeah.
Oh, you said pillar number 5.
I know.
Oh,
it was
gotcha.
a joke. Yeah, that's called a joke, Paul.
Oh, that's a good joke.
Okay. And Abdon, I see those double thumbs up every video.
Every
Abdon.
video.
Every video Abdon does it. I see it every single. I'm like, why are they always doing that? Every single video.
Time and I was like, you do this every video. He's like, I'm trying to boost the algorithm.
I appreciate it. All right, guys, thanks very much. Email me if you need anything. Again, don't expect a response, but it'll be handled.
All right, folks, that's our show. That's our stream. And we appreciate you guys being awesome. And 9:45 tomorrow, Mo trading for top tiers, and Mo in the morning at 9.
And by the way, Llewellyn is not a hot chick. Just
Yeah,
an FYI for everybody who sees the picture. It's a dude.
Fireside
Not a hot
chat.
chick.
Fireside chat next Friday at 6 p.m. Eastern. We'll see you there. We love you guys. Thanks.
See you guys.
All right, I saw 68.